Welcome to the new video, guys. So today we will be talking about order blocks. The order blocks, which order block you should choose and which order block you should not use. So before choosing the order blocks, you must keep in mind that there must be a liquidity. If there is no liquidity, the order blocks you choose will not work. Why? Because market needs a fuel to go upside or downside. If there is no liquidity, there is no sense that market will go upside or downside. So today I will explain you which order block you should choose and that actually works and which order block you shouldn't use, right? So from here, price is making lower highs and lower lows and price made a break of structure from here, from here. And many of you guys have studied that 99% of mentors are telling that this is a break of structure, this is a break of structure, this is a break of structure, but actually this is not a break of structure, right? So this is a single leg. Price made a break of structure from here, and this is the low, and this is the high. So first order block you should choose is there. Why? Because there is a liquidity. This if there is no liquidity, that order block is no longer valid. You should you can choose this order block also. Because why? Because there is a liquidity. You can see there is a trend line liquidity to the downside, and market can go upside, mitigated this, and go to the downside. But if you are choosing this demand zone, this supply zone, right, the order blocks or POI, whatever you can call, right? If you choose this, there are a lot of chances that your stop loss can get hit. Why? Because there is no liquidity. There is no sense that market will go to the downside. You getting me? So that's why it is important that market make a liquidity first. Only then you can go to the downside or upside, right? You can make a sell move or buy move. If there is no liquidity, there is no sense that you trade on the buy side or the upside. Yeah. So let's come on the bullish side. Market made a make a break of structure from here, from here. And now many of you guys have seen that some people made a mark a break of structure from here and mark this order block. And sometimes there are 50% chances that market mitigate this demand zone and go to the upside. But most of the chances, what happen is market mitigate this demand zone, show some reaction and go to the downside, and then mitigate this demand zone and then go to the upside. Right? Why this happen? Because there is no liquidity to the upside. If we see from this order block, there is no liquidity to the upside. If you choose this order block, you become the liquidity, and market make a move to the downside, mitigated this demand zone, and then go to the upside. Right? In this way, market goes. Market needs a fuel first, only then it can go upside to and to the downside. So let me show on the live chart only so you will understand better way. Like this is the high, market made a break of structure, and now what happen is some of you guys mark this as a break of structure, right? Market show some reaction, market show some reaction, and then what happen is market collects all of your stop losses, mitigate this demand zone, and then go to the upside. So this is what I am teaching you right now. Market have to create a liquidity. You can see a trend line liquidity. There is also equal highs up to the upside. Like I don't know what are the retail traders call this, but I guess equal lows or double bottom or triple bottom. I don't know. So in this way, market works. Never choose order blocks that doesn't have the liquidity. So in this way, you can get profitable, and there are a lot of chances that your stop loss never get hit, right? So this is a 4 hour chart. So from here, market was a bearish. So this, and now we will see some of you guys mark this as a break of structure, this as a break of structure, and this as a break of structure. But actually, this was the high. This is not a break of structure. This is a single leg. This is a single leg. This is single move, right? This is not a break of structure. So you should mark your break of structure like this. Your first sell move from this only. This was the liquidity. The first move, recent high and recent low is the liquidity. Market goes to the upside and mitigate this demand, this supply zone, right? Market mitigate this demand supply zone and goes to the downside. Why this happen? Some of you guys sell from this. Your stop loss can get hit. Some of you guys have sold from this too, and your stop loss can get hit. So this is how this works, and which order blocks you should choose. So let's come on the topic. I have explained you briefly, guys. So let me explain you here. Order blocks you should choose. So imagine market go making lower highs and lower lows like this, right? So many of you guys have marked. Sorry, some of you guys mark this as a break of structure, right? This as a break of structure. This as a break of structure. This as a break of structure. But actually, this is a single leg. All this is a single leg, right? Market have to taken out the first low first. Only then you can consider your break of structure, and only then your high is valid and your low is valid. Let me tell you how. Market breaking a break of structure, making break of structure from here, and from here. Then what happened is market took out the first high and went to the upside. Now, which order block you should choose? The order block, this order block, and the extreme order block. These are the high probability order blocks that works, except those all are SMC traps. Everything is SMC traps, right? Don't use order blocks that doesn't have the liquidity. Only choose those order blocks who have the liquidity. Only then your order block is valid. Otherwise, your stop loss uh, can get hit. Can get hit, right? There are a high probability that your stop loss will get hit if you choose order blocks that doesn't have the liquidity. So this is how you can choose your order blocks. If there is a bullish trend, let me explain you. Market making higher highs and higher lows. So here what happened is market took out the first low. This was the liquidity. And now what you can do is either choose this order block or the extreme order block, right? Don't use this order block also, like this order block. Why? Because this is a 10 line liquidity. There are a lot of chances that your stop loss can get hit, right? This is how it works. And then what happened is market mitigated this demand zone, made a change of character from here, and market can go upside. So this is how it works, right? So order blocks before the inducement, this, and extreme order blocks. These are the only order blocks that works 90% of the chances. And sometimes what happen is market just sweep the liquidity from here. Market do not mitigate this demand zone, goes to the upside, sweeps the liquidity. Candle closes below this induce liquidity or inducement and goes to the downside. And in the next video, I will explain you how you can take entries when market make a sweep the liquidity or something like this, right? So see you guys in the next video. Please do make a subscribe and share the video with your friends. The next upcoming videos will be very powerful and are the most important topics that I'm going to teach you. So stay tuned, guys. Thank you.